Now, keeping it with the oil space this time, in a surprise move, Saudi Arabia has slashed oil prices to Asia by the most in over 2 years, just days after OPEC announced an output hike. Now, Aramco is cutting Arab Light prices by $2.30 a barrel for May, even as oil prices tumble and global demand jitters rise. Now, the OPEC Plus move, led by Riyadh and Moscow, adds 4 lakh barrels a day to markets deepening the oil price route.
It does look like Monday blues has in fact come with a tinge of red, and that is something that we see extending as far as Bitcoin is also concerned. Bitcoin also joining the global rout after falling over 6% last evening below the $78,000 mark. Even as cryptos also succumbed to the sell-off triggered by Trump's tariffs. In fact, over $400 million in long positions were liquidated in just 24 hours. So that's the kind of number that you're working with. In fact, with global markets also losing over $7.5 trillion in just 2 sessions, you do have crypto traders that are also bracing for more pain, with Bitcoin down 15% this year. So that's what you're working with for Bitcoin, not just in terms of one session, but on a year-to-date basis.
Well, those are the kind of moves we are seeing when it comes to the markets. Now let's go across and take a look at some global stories. Hang tough. That's the message Trump has given to Americans as global markets stumble and China fires back with a 34% tariff. Now, the president doubled down on tariffs, calling it an economic revolution, warning that it won't be easy, but the end result will be historic. Now, he added that unless China's trade deficit is resolved, there will be no deal. He doesn't want stocks to go down, but sometimes you have to take a medicine to fix something, is what he says. Listen in to that excerpt.
I don't want anything to go down, but sometimes you have to take medicine to fix something. I spoke to a lot of leaders, European, Asian, from all over the world. They're dying to make a deal.
Let's also get you some news and updates. Meanwhile, thousands took to the streets across all 50 US states in the largest wave of protests since Trump took office. There you have it, some visuals on your screen as well. In fact, demonstrators also rallied against deep budget cuts, immigration crackdowns, as well as sweeping tariffs. While on the other hand, this is what people who elected him did, and on the other hand, you did have Trump who spent the day golfing in Florida.
Despite those protests, Trump's administration backs the president's comments. The White House isn't blinking on tariffs despite the market rout. Commerce Secretary Howard Lutnick said in an interview, in fact, that the tariffs are coming and there will be no postponing. Treasury Secretary Scott Bessent echoed that line as well, saying that they will hold the course even as over 50 nations push for talks. Moving on, let's take a look at what Fed Chair Jerome Powell had to say about the recent trade policy changes implemented and how the Fed plans to mitigate the risks and uncertainties.
Surveys of households and businesses report dimming expectations and higher uncertainty about the outlook. Survey respondents point to the effects of the new federal policies, especially related to trade. We are closely watching this tension between the hard and the soft data. As the new policies and their likely economic effects become clearer, we will have a better sense of their implications for the economy and for monetary policy. We face a highly uncertain outlook with elevated risks of both higher unemployment and higher inflation. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. Our monetary policy stance is well positioned to deal with the risks and uncertainties we face as we gain a better understanding of the policy changes and their likely effects on the economy. It is not our role to comment on those policies. Rather, we make an assessment of their likely effects, observe the behavior of the economy, and set monetary policy in a way that best achieves our dual mandate goals. We have stressed that it will be very difficult to assess the likely economic effects of higher tariffs until there is greater certainty about the details, such as what will be tariffed, at what level, and for what duration, and the extent of any retaliation from our trading partners.
Rather than that's the word coming in from Fed Chair, but
If you like this video, then like, share and subscribe to ET Now.